Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin dominance. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. The Bitcoin dominance train has been going for a long time, a very long time, longer than this chart would actually suggest. And I want to talk about in this video how it could theoretically continue to go higher. Surprise, surprise, right? Surprise, surprise. But, you know, it does continue to slowly go higher. In fact, the only reason why it feels low right now is because of this wick, right? It's because of this wick. But if you ignore that wick and you just look at, you know, weekly closes or something, one of the things you'll notice is that it just kind of keeps on putting in new weekly close highs. So Bitcoin dominance just keeps going higher despite many failed proclamations that it topped and that alt season was beginning. Now, in this video, I want to really hammer home again why Bitcoin dominance is important, what caused it to top out last cycle, and where I think it could theoretically go. Okay, so those are my goals, and I'd like to communicate those as effectively as possible. Now, the first thing to talk about is why is it important? Because this is where I lose a lot of people, because they're just like, well, you know, how do you trade something like this? It's not really worth our time to think about this. But if you think about it, opportunity cost is a big thing, right? If you go out and you buy an expensive item at the store, let's say you have to, let's say you need a car repair, or you're a new homeowner and you got to replace the HVAC system. There's opportunity cost, right? So you think about, oh man, I have to put all this money towards this thing. I don't really want to. Think about where else I could have put that money and how much better that would have been if I didn't have to spend it over here. The problem is that a lot of people think that way about those expenses, but when it comes to investing in the Cryptoverse, they don't make that same connection with Bitcoin as it relates in comparison relative to the altcoin market, right? I mean, they just think, oh, well, the sort of the false narrative that a lot of people operate under is that altcoins outperform Bitcoin in a bull market. But as we've explained many times, there's really, there's multiple types of bull markets in the Cryptoverse, and we've been in a Bitcoin dominance bull market really since May of 2021. Now, that might not seem like a true statement, because if you were to look at this chart, you could argue, well, Bitcoin dominance put in a low all the way out in September of 2022. And you would be right? I couldn't really argue that this metric put in a low in September of 2022. But the reason we talk about Bitcoin dominance is because we want to know the relative valuation of altcoins against Bitcoin. I don't care so much what the stablecoin market cap is doing and how that affects Bitcoin dominance, right? I want to know if my opportunity costs, right? Are my risk-adjusted returns better in alts, in Bitcoin, in cash, right? Whatever it may be, I want to know what the answer is. I don't really care what, the emotional guys on Twitter want to say about alt season, right? I just want to know at any given moment what maximizes my risk-adjusted returns, right? That's what I want to know. So when you look at a chart like this, it looks like Bitcoin dominance did not bottom until September 2022. But if you go over to the website, right, and we look at, this is the Into the Cryptoverse website, and we look at Bitcoin dominance, this is including stable coins, right? So this is the dominance chart including stable coins. So it looks really similar to what you'll see on TradingView. But we have this feature that allows you to exclude stable coins. Now, when you exclude stable coins, what's fascinating is that Bitcoin dominance bottomed in May of 2021. You're talking about almost 4 years ago. Almost 4 years ago. That's a long time for Bitcoin dominance to be in this uptrend. And when you exclude stablecoins, and this is only looking at daily closes because no one really cares about intraday wicks, Bitcoin dominance just put in a new high on March 11th, where it went, excluding stables, it went to 66.92%, almost 67%. Meaning that just a couple of weeks ago, Bitcoin, when you exclude stables, made up 2/3 of the cryptoverse. That's a sobering percentage, right? That's a sobering number that a lot of people might not be thinking about so much. Now, what I continue to think about with regards to Bitcoin dominance is what actually caused it to top out last cycle, right? And we want to know, have those conditions been met this cycle, right? Have they been met? It's not about what I want to happen or what you want to happen, or if you want your altcoins to pump. I'm sure your alts have done just fine. It's all about what does the data suggest is the most likely outcome, okay? Now, listen, in 2021, when we first started talking about Bitcoin dominance going into a macro uptrend, I would not have assumed back then it was going to take, it would still be in an uptrend in March of 2025, right? Like, I would not have assumed that. But it's also important to adapt to the market and what the data suggests, right? It's important to adapt to that stuff and not just say, well, it has to top here because this is when it topped last cycle. A lot of this ties back to monetary policy. But before we get to that, I want to just go through one little exercise. I've done this many, many times to convince you why it's important, okay? Let's suppose you're interested in ETH. All right, let's suppose you're interested in ETH. And look, it's not been a fun few years if you're an ETH maxi, right? So, just a moment to just kind of reflect on the chart, right? A moment to reflect on the chart. But it is somewhat abstract for someone new to crypto to think about, the Bitcoin valuation of cryptocurrencies. When you think about it like 0.023, for a lot of people, that doesn't really mean anything. They're like, oh, well, it's 0.023. What's the, what if it's 0.026? All right, it's up a little bit. What does that even mean? How does that affect me? The trick to make it less abstract is to, pick out your favorite altcoin, which I'm sure has an absolutely thriving community, and go over here to TradingView and actually put it on its Bitcoin pair and then look at the inverse of it. And it tells you the story that is begging, it wants you to hear, right? It's telling you the story that it really wants you to hear. And it's this story right here. That in 2021, one Bitcoin was worth about 11 ETH, right? 11. Now, I turned bullish, or I turned bearish on ETH Bitcoin right here. That's where I turned bearish on ETH Bitcoin, meaning I turned bullish on this chart, 1 over ETH Bitcoin. And when I flipped my bias, because when the first video on my channel was published right here, and it was talking about how ETH Bitcoin was going to do very well and how Bitcoin dominance was going to collapse, right? That was the very first video on my channel in like September of 2019. This is when I flipped on it. It wasn't at the absolute bottom. It was not. Hold my hand up high. I'm not here to time bottoms or tops. I'm here to try to identify major shifts in the market, right? That's what I care about. And so back then, one Bitcoin was worth 11 ETH. It took me until one Bitcoin was worth around 13 ETH to get on board, to flip my bias. Today, one Bitcoin. It's a calm day, right? The cryptoverse is quiet. Not a lot has been going on. But today, one Bitcoin is worth over 43 ETH. Meaning, had you taken the trade back then, whether it be in late 2021 or early 2022, you've easily, if you took your Bitcoin, I'm not suggesting you need to do this, but I'm saying if you did convert your Bitcoin back to ETH right now, after having made the trade over here, your one Bitcoin would now be worth 3 to 4 times the amount of ETH as it was just a few years ago. Now, why is that important? Well, you have to remember that no one has a crystal ball, including and especially me, right? And especially me. No one has a crystal ball as to where the USD valuations of cryptocurrencies are going to go. No one really knows, right? We all pretend to know, and some people appear more confident than others, but no one actually knows. And so, and we talk about, left translated cycles and right translated cycles and risk on and risk off and all this other stuff, right? But no one actually knows. And so the important thing to think about is, well, if no one knows and you want to invest in something, what do you invest in, right? And so the argument has just simply been that Bitcoin is worth more your time and energy than the altcoin market until certain events take place. Now, right, if you're a Bitcoin maxi, you're going to say, well, there's no reason to ever invest in altcoins, right? And your argument there is certainly not falling on deaf ears. As I said, by the end of the Bitcoin dominance uptrend, a lot of people will just be Bitcoin maxis. This is what happens during Bitcoin dominance uptrends. A lot of people become Bitcoin maxis. The same thing happened in 2018 and 2019, right? Same exact thing happened. It just happened on a shorter time frame, a much shorter time frame. Where back then, Bitcoin dominance, or ETH Bitcoin, bottomed out, meaning the inverse of it, topped out in September of 2019. So you're talking about September of the pre-halving year. We're now in March of the post-halving year, and we don't even know if the train's over, right? If the train ride's over. It might not be. You can do this same exercise with a lot of altcoins, right? You can go look at ADA Bitcoin and go look at 1 over that, right? Go look at 1 over that, and you'll see a chart that has been trying to tell you something for a long time, right? Back in 2021, 1 Bitcoin would have fetched you 16,000 ADA. Today, it gets you around 118,000 ADA. Not too long ago, right, back in November 2024, it got you about 210,000 ADA. But you see how these trends can go on for very long periods of time. And you can go through the list and find this type of analysis on a lot of different cryptocurrencies. Now, if you look at total 3 minus USDT divided by Bitcoin, one of the things you'll notice is that there's a support level, right? A support level, right? I mean, let's not get carried away, but there's a support level, which corresponds to 0.25. And there was one time where they went lower, 0.18, right? Now, I keep going on and on and on about how this is likely going to happen eventually. But what's really interesting is that we recently had a policy, an announcement of a policy shift by the Federal Reserve. And that policy shift is that they're going to slow the pace of quantitative tightening. That's what they said they're going to do. And they're going to do it in April. The last time they made such an announcement was May 1st, I believe, of 2024. So this week right here. May 1st, that's February 1st. May 1st, let me find May 1st on here. Right here. That week right there. This is the last time the Fed came out and said they're going to slow QT. They're going to slow quantitative tightening. Now, back then, when that happened, immediately people screamed alt season. What happened? And where were alt Bitcoin pairs at the time? Where were they? They were actually just below the bull market support band, right? So back then, the bull market support band for alt Bitcoin pairs was around 0.45. And you can see that alt Bitcoin pairs got rejected from that level and then went down to new cycle lows. You see that? So then, did quantitative tightening slowing have any effect? Well, that's a good question. I'm glad you asked it. And the answer is it did. If you assume that that it's not just coincidence, I suppose. this is the 50-week moving average. This pink line right here. This is the 50-week moving average. What you'll notice is that when quantitative tightening was running at, the pace that it was running at initially, alt Bitcoin pairs were bleeding at a fairly robust pace, right? But when the Fed announced a slowdown to quantitative tightening, and you can see the market started to anticipate it, you'll notice that the slope, the angle of attack, or I guess in this case, the angle of descent, but the angle of attack decreased, right? It decreased, and again, this is going to depend on your aspect ratio, but it decreased from like negative 55% down to just negative 20% when you look at a 50-week moving average. Now, again, don't try this at home and try to match it up, because depending on your aspect ratio, those angles are going to change. But this, right, this is the effect, you could argue, that the slowdown of QT had. How many times have you heard Powell say that it increases the runway, right? By slowing it down, it increases the runway. You could argue that had they not slowed QT down and they just did what they did last cycle, where they just kept it going until all Bitcoin pairs hit the range lows, they're not actually looking at crypto. Please don't post that in the comments, or please do, because it helps the algorithm. They're not looking at crypto, but crypto gives us insight into the consumer. You could argue, had they just kept the pace the same, that all Bitcoin pairs would have already gone to the range lows, and we'd already be through this mess. But they wanted to expand the runway. And expand the runway, they did. Higher risk assets continued to hold up better against lower risk assets, even though they were still bleeding, right? They were still bleeding, but they were holding up better against higher risk assets than they were previously. And you can see that alt Bitcoin pairs have been in this sort of like this broadening wedge ever since June of 2023, where essentially what's happening is the market keeps chasing Bitcoin season whenever alt Bitcoin pairs are down here, and then alt season when they're up here. But the problem, and this is sort of the conundrum that the Cryptoverse has been faced with, and why this cycle is just so exhausting, is because the market conditions have not really been, they've not reached the point where it justifies alt season, because, well, we're still in quantitative tightening. Even though the wind is not blowing as hard in that direction, doesn't mean the wind's not blowing, right? It's just not blowing as hard as it was before. So there's not really enough juice to send alt Bitcoin pairs much higher. But then whenever they come to the lows, there's just, with the slowdown of QT and the goal of expanding the runway, it just means that they keep bouncing rather than just simply breaking down to the range lows. So that's sort of the issue that the market has faced, is there hasn't really been a resolution. So instead, the lows are a little bit lower and the highs are a little bit higher. But neither side truly gets a resolution. At the end of the day, all Bitcoin pairs have spent a majority of their time below the bull market support band for years now, right? For years. And one of the things to notice, and let me go ahead and get rid of the 50-week moving average. One of the things to notice is that, and I've said this before, is that this year seems to be a somewhat more volatile version compared to last year as it relates to all Bitcoin pairs. Because last December, December of 2023, alt Bitcoin pairs also had a rally. December of 2024, they had a rally where they swept the prior high, right? They swept the prior high, but it wasn't alt season, right? It was not a durable move. And then there was a lower high in January of 2024, just like there was a lower high in January of 2025. And then there was another lower high in March of 2024, just like this is potentially a lower high in March of 2025. And so if you go back to the last time, as I said, the Fed announced that QT would slow down, it was in early May of 2024, right here. And at the time, all Bitcoin pairs were just below the bull market support band. And everyone was screaming alt season. And instead, they just went down again. The alts went down against Bitcoin. So I look at it again today, and I don't know why this time would be any different, right? One thing to consider, and I've said this many times, and we're going to look at a couple of new things as well, at least one new thing, is that in 2017, when you just look at this metric, and we're going to look at it in a different way in a minute, total 3 minutes USDT divided by Bitcoin. Alt Bitcoin pairs, as measured like this, were actually at their lows in November of the post-halving year, right? November of 2017. Now, I remember seeing this back in 2021 and 2022 and thinking, like, could it really take until that time? And it wasn't my base case. But my base case, though, is that alt Bitcoin pairs will eventually go to the range lows. I don't know exactly what day it's going to happen or month, but that is my base case. And you have to wonder if this sort of the idea that Powell is giving the markets more runway is actually true, then perhaps there's some reality where by just slowing down the pace of quantitative tightening, what if it just simply takes until later this year for all Bitcoin pairs to get to the range lows? If you expand the broadening wedge, it doesn't quite get you there by November. I guess if you draw it like that, I mean, it depends on how liberal you are with your drawing, but if you're honest with yourself, it still doesn't even get you there by November of 2025. In fact, in order for it to get you there like this, it would take until September of 2026. Maybe earlier, because I think those wicks are not exact there. August of 2026. Is it going to take that long? That's not my base case. Like, I don't think it's going to take that long, but I also wouldn't have said it was going to take until past March of 2025 either if you had asked me 4 years ago. So I guess it's possible that could happen. I think that if nothing breaks in the markets and the markets just kind of keep holding up okay, it's possible QT could go on for far longer than anyone thinks. Yes, they've reduced parts of it, but mortgage-backed securities are still rolling off, and I think they have over $2 trillion in that. That's probably not going to be stopping anytime soon. That doesn't mean they won't get to delta neutral before that completely rolls off, but it's probably not going to change anytime soon unless something breaks and then all Bitcoin pairs just sort of collapse to the range lows, right? If that happens, then something might actually change. As long as that doesn't happen, we just have all this runway, right? Of, well, when Bitcoin goes up, altcoins go up less. When Bitcoin goes down, altcoins go down more. Any given day, you can point to that alt and say it's not true, but collectively, the altcoin market is bleeding. But I'm not talking about your alt, right? I've never talked about your alt. So I do think that people should be prepared for something like that, where it just takes a little while longer for this to play out, for alt Bitcoin pairs to continue to bleed. Now, I want to measure this in a different way, because a lot of people say, well, why don't you subtract out more than just USDT? Why don't you subtract out USDC as well? Well, we can do that, right? If you subtract out, if we go to TradingView and add in, we subtract out USDC, you can see it's basically the same chart. The downside is we don't have as much data, right? It only goes back to December 2018 because it's TradingView here, and it only goes back as far as the newest asset that you're measuring, and we don't have data on TradingView beyond this, and so we can't look back as far. But what we can do is we can go to this nifty little website that we've spent the last 3 to 4 years coding up and add a metric to it. And what we're going to add is total market cap 6, TMC 6. This is total market cap of crypto, excluding Bitcoin, ETH, and stable coins, right? That's what we want, right? That's what we want. So click on that. Click on that. Total market cap 6. And what we want is we want the market capitalization of it. That's what it looks like. Oh, okay. This high here so far is just a sweep of the high from November 2021. Now what we want to do is we want to add on Bitcoin market cap. And then we want to add a formula where we take TMC6, which in this case we've defined as M1, and we're going to divide it by M2, Bitcoin's market cap, and evaluate. Now let's remove the market cap. This is what the chart looks like, going all the way back to 2015. Isn't that convenient, right? Isn't that nice? It tells a slightly different story than the other chart. When you look at it like this, we're still off the lows, certainly. But it's not as far off the lows, perhaps, but still off the lows. The thing that catches my eye, though, is that it just looks like these are all lower highs, right? These are all lower highs. And you can see the same thing on this chart, right? I mean, and let me go back to just excluding USDC because I don't really think it's that. It carries a lot of weight. Same thing, right? I mean, these are all lower highs. And when I look at it, I can't not see that. As much as I want to, I can't not see it. That doesn't mean that alts will never go up against Bitcoin again. What it means, though, is that it's not a bad idea to think about your portfolio in terms of Satoshis, right? And that's the important part of all this, is thinking in terms of Satoshis and not in terms of US dollars. So what a lot of people will do, they'll say, oh, they're going to go buy altcoins when QE starts. And I'm like, and they'll say they're going to buy it with US dollars. I'm like, huh, I wonder where they got that. It's strange to me. Because if you look at alt Bitcoin pairs, and you look at where QT ended last cycle and where QE began, and by the way, just because QT ends does not always mean that QE begins, even though it did last cycle, that's where alts bottomed against Bitcoin last cycle, was when QT ended and QE began. So some people are over here, and they're like, okay, I'm going to set aside some cash, I'm going to buy altcoins when QE starts. And they just keep on waiting, and they keep on waiting and waiting and waiting. But what they're missing is this, is that they're taking the principles of Bitcoin dominance, but then for some reason, they're thinking in terms of US dollars. Okay? It's true that alts bottomed against Bitcoin last cycle when quantitative tightening ended. That's a fact. But it's also a fact that when QE started, the altcoin market on its USD pair went down for a while, right? And then it went into a recession. Of course, we printed our way out of our problems like we always do. But the point is that a lot of people are saying they're going to buy alts when QE starts. But if QE starts, it implies something is wrong. Because Powell already said they're not going to start QE anytime soon. And they're not going to start it until interest rates are back at zero. Who knows if that's true or not. But it's not really on the menu anytime soon. Right? And so if it's not on the menu, well, if you think it is on the menu, and you wait until then to buy alts with US dollars, well, you could just be simply buying into a downtrend. Right? QE comes back because they're trying to save the market. And you're just the person who buys in because you think QE is going to save everything. And it doesn't. Because when QE started last cycle, alts really didn't start to go up a lot until QE really got in gear, right? Until it really got in gear. So they're taking the principles of Bitcoin dominance, but thinking in terms of US dollars. If you said that you were going to preserve the Satoshi valuation of your portfolio, and then maybe convert a little bit of Bitcoin to some other stuff whenever QT ends, I could at least get on board. Like, I could understand that. Because then you're saying, well, I don't know where you don't know where the USD valuation is going to go. But at that point, hey, at least maybe altcoins will bounce. The reality, though, and I go back to this a lot because I don't want people to lose sight of this. It's easy to lose sight of this because a lot of people are eternal optimists in the cryptoverse. They're always calling for alt season. But you got to look at the cryptoverse both ways. And it's convenient to look at alts like going to the range highs and going to the range lows and just saying that this is a deviation above the range high and that this is a deviation below the range low, right? It's easy to say it. We all want to say it. But there's also a reality. A cold, brutal reality that alt Bitcoin pairs have been putting in lower highs and lower lows. Going basically back to when this chart began. I know that's crazy to think about it like that. But it has. Right? It has. And just because it's an inconvenient truth doesn't mean we should ignore it. Right? This is why I said back in 2021, 2022, when I was calling for Bitcoin dominance to go to a conservative target of 60%, I was never concerned about Bitcoin dominance reaching 60. Even though all the trolls on Twitter, laughed anytime it dropped 1 or 2%, I was never concerned about it hitting 60, right? I was more concerned about what if it doesn't stop at 60, right? Like, what if Bitcoin dominance is not a bleeder? Like, what if it's not just going down? And the reason I thought that was because despite all the money printing in 2021, Bitcoin dominance was, and this includes stable coins. I mean, for Satoshi, this included stable coins, and Bitcoin dominance could still not make a lower low compared to 2018. That's pretty crazy when you think about it. Because the stablecoin market cap made up a lot more over here than it did over here. And alts still sucked more against Bitcoin in 2021 than they did in 2017 and 2018. That's the real story. So when we think about, people say like dominance is going down, I'm like, well, from what time frame? As far as I can tell, it put in a low in January 2018, and then it put in a higher low in September of 2022. And yes, I get that you got some highs over here, right? And that maybe this ends up being a lower high. But there's a lot of guys that like to operate under the assumption of like the just you wait principle, right? Well, just you wait, Bitcoin dominance is going to crash. And our alt season calls will be right. But listen, if you spend 4 years calling for alt season and then alt season finally occurs, the altcoin has to pump like 1,000% just for you to be at a 50% loss. Because if you watch them drop like 95% against Bitcoin over 4 years, you need an alt season maybe to just get back to break even. That doesn't really help, right? It doesn't really help if the argument is, well, just you wait. Because a lot of these alts can just keep going down against Bitcoin forever and ever and ever and ever. And most of them will. Even when Bitcoin dominance tops out. That doesn't mean that your neighbor's alt will bottom out against Bitcoin. I'm sure yours will. But it doesn't mean that everyone's alt will bottom out. There's a lot of altcoins that just keep on bleeding forever and ever and ever. And they don't stop bleeding just because you want them to. Or because someone told you it was alt season. They just keep on bleeding against the kink. This has happened with more altcoins than any of us care to count. I personally think there has been a huge misallocation of capital this cycle away from what matters and towards meme coins. Now, recently, the meme coin market has calmed down, but it baffles me that that is the way the cryptoverse was headed for so long, right? It really does baffle me. Although I guess it shouldn't. But it did. I mean, I struggled to really understand, like, what were people thinking? Like, why were they throwing all this money into these meme coins? And then I'm like, all right, well, maybe it's because all this regulation risk in 2023 and 2024, and they were too scared to put it in other things. But, you know, the reality is that, you know, people talk about cycles and whatnot. Bitcoin dominance has been going up since May of 2021 when you exclude stablecoins. Since May of 2021. That part of the cycle never actually ended. I think people just thought it ended because Bitcoin USD went up. But the bleed of alts to Bitcoin never actually ended, meaning the altcoin reckoning never ended. Even though people thought it ended because their alts went up against the US dollar, the altcoin reckoning is the valuation of alts against Bitcoin. And that never ended. The bleed never ended. The reckoning never ended. And maybe it never ended because monetary policy never sufficiently changed. But what did you notice recently? Well, the S&P 500 got a 10% drop, and it did it pretty quickly. And the Fed responded. An important lesson to learn with investing. The Fed does not tell the market what to do. The market tells the Fed what to do. Right? The market tells the Fed what to do. The market dropped 10% within a few weeks, mostly between February OPEX and March OPEX. We said that's likely going to be risk off time. And what did the Fed do? They slowed quantitative tightening by what? From 60 billion a month to 40 billion a month or something like that. So the Fed listens, right? The Fed listens to the market. If the market were to drop more, and I mean, it maybe bounces and then drops again, right? If it keeps dropping, then the Fed will list it again. And they might get closer to that delta neutral status. But until that actually happens, until quantitative tightening actually ends, then why would the base case not just be Bitcoin dominance goes higher, no matter the direction of Bitcoin USD? If you look at the monthly Heikin-Ashi candles of Bitcoin dominance, you know how we talked about 60% being sort of like the conservative target to hit? The only red monthly Heikin-Ashi candle that Bitcoin dominance has had since November of 2022 was in December of 2024, just after it wicked up above 60%, right? That's the only red candle that Bitcoin dominance had when you look at monthly Heikin-Ashi candles. So that shows you just how strong this Bitcoin dominance trend has been. It's been incredibly strong, incredibly strong. And this lesson, I think this has been a lesson for everyone. Now, one of the things that's interesting is if you think about altcoins as oscillators at best, not at worst, that means eventually they go to the range lows, whether we like it or not. Some of them are already getting close. If you look at like the market cap valuation of ETH against Bitcoin, look at this chart. I remember pointing this chart out back in 2022 many times and saying this was likely going to happen. And good luck convincing anyone back then. Now, look where it is, right? I mean, you know, it's getting into that range now. 0.14. The lowest it went in 2019 was 0.1. And that's where QT ended, right there. When ETH Bitcoin market cap ratio hit 0.1. Right now, it's at 0.14. If you look at ETH dominance, you'll see this chart, right? You'll see this chart. This here, this higher low, no, right? That was sort of the optimistic view. The more realistic view is that they're oscillators at best. And what's happening? It keeps going down. ETH dominance keeps going down. Last cycle, QT ended when ETH dominance hit 7.09%. So far, it's gone as low as 8.54%. So ETH, if it plays out the same way, right, in terms of time, which it probably won't, but if it did, that would mean ETH dominance would bottom in 2 months, in May, which would imply that maybe the Fed ends QT in May. That's not really my base case right now. And if the market doesn't drop more, it shouldn't be your base case either, in my opinion. Not financial advice. But this has never actually stopped dropping. And that's a problem. Because here's the thing, right? A lot of people dunk on ETH. But remember, alt season doesn't start until ETH Bitcoin bottoms. ETH Bitcoin is sort of the index for the altcoin market, right? It tells you what's possible in the altcoin market. You can dunk on ETH Bitcoin all you want, but if you're holding a basket of altcoins and then you're simultaneously dunking on ETH, you're dunking on yourself at that point, because until this turns around, a lot of alts are not likely going to turn around until this does. Now, one of the things to remember is the Advanced Decline Index. We almost forgot about that. Top 100 cryptocurrencies, ADI, just put a new low, March 10th. We keep saying the trend keeps on going down, just like it did last cycle. Last cycle, it bottomed a few months after QT ended. That's when the ADI bottomed. You know what else that corresponded to? When the ADI bottomed in January 2020, or maybe December 2019? Yeah, January 2nd of 2019 is when the ADI bottomed. You know what that corresponded to? Any takers? It corresponded to Ethereum going and tagging the lower logarithmic regression trend line right here in December and January. December 2019, January 2020. That is when the Advanced Decline Index bottomed. And that is when all Bitcoin pairs started to really go up. Right there. What about this cycle? We can see that in the 2016 cycle, ETH USD went down there. This cycle had never actually happened. Maybe it's still going to, right? Maybe it's still going to. And that is where the ADI starts to actually go back up. It's possible, right? I mean, these outcomes are certainly possible to occur, especially given that quantitative tightening didn't end. If Powell had come out and said at the last meeting that they were ending QT, I might have had to pivot my view on some of this stuff. But he didn't. And it just gives me more confidence that maybe the Cryptoverse is trying to tell us something about the consumer. That the consumer is experiencing a little bit of weakness. One of my favorite charts recently, they kind of ebb and flow, but one of my favorite ones recently is others divided by total 3 minus others. Because it tells you whether lower market cap alts are outperforming higher market cap alts. And what's really interesting is that lower market cap alts topped against higher market cap alts in March of 2024. The same area they topped at in January 2022 and in February of 2021, basically. Then they finally broke down in January 2025. Now, remember what we said about this? We said that with lower market cap altcoins breaking down against higher market cap altcoins, it suggests that liquidity is starting to dry up some, right? That's what it suggests. And so because of that, we were talking about ETH USD potentially finally breaking down itself. So lower market cap alts started to bleed out against higher market cap alts. So lower liquid altcoins started to bleed out against higher liquid altcoins. More, altcoins with more liquidity, suggesting that liquidity was drying up. So the lower market cap alts got hit first. Then the higher market cap alts got hit in February, like Ethereum. I don't really consider ETH an alt, but it is what it is, right? Technically it is. In February. That's where ETH broke down, was in February, 1 month later. So first, in January, it was lower market cap breaking down against higher market cap alts. Then in February, it was ETH breaking down against the US dollar. And then in March, and then in February and March, it was Bitcoin breaking down below the bull market support band. Right? That's how it played out. That's how this whole thing played out. And the big drop by Bitcoin on a weekly time frame occurred in March. So you had the high-risk altcoins dropping in January, Ethereum really breaking down in February, and then Bitcoin breaking down in March. So the higher risk stuff, like the lower liquidity stuff, said something was wrong. And that's why I was talking about why there would likely be weakness between February OPEX and March OPEX. There's not always, right? I mean, certainly last year there wasn't weakness between those two dates. The market went up, right, in February. It went up in February of 2024. But the reason we called for it this time to potentially be risk off was because we looked at the lower market cap alts and said, look, they're breaking down against higher market cap alts. This could suggest that Ethereum finally goes home, and that could, lead to a shift in monetary policy, right? And I think that when you identify sort of the risk, and also with a new administration and the pricing into perfection, we mentioned January 20th many times as likely being at least a local top. It makes sense when you think about, how that stuff ultimately played out. The entire pandemic drop occurred, basically starting the week of what is this? February, late February, mid to late February, and then ending in late March. Sometimes when the market turns in mid-February, you can get larger drops than people are used to, and it can lead to really bad sentiment in the cryptoverse. And because sentiment has been so bad, and because we have focused more on meme coins this cycle as an industry, you could argue that that's one of the reasons why retail interest never came back. The social risk right now is 0.006. There's literally dozens of us left, right? 0.006. A lot of people left. Anytime there's a rally, all the influencers, not all of them, I'm not talking about your influencer, right? A lot of influencers just start shilling the crappiest of altcoins, of meme coin rug pulls. New investors come back, they get rugged, they leave. That's what keeps happening, right? Anytime the social risk goes to the 0.4 to 0.5 risk band, we get excited, everyone's calling for all season, and then it just crashes back down again. And altcoins bleed out again. And they go lower against Bitcoin, right? Things are changing slowly, but quantitative tightening is slowing. But just because it's slowing doesn't mean the wind's not blowing in the wrong direction for altcoins. It's still blowing in the wrong direction. And remember, the coefficient of kinetic friction is less than the coefficient of static friction. So you could argue it can be harder to make for trends to change, right? It can be harder for trends like this to really change. But once you start going in another direction, you don't need, a slowing the wind down a little bit doesn't mean it's not just going to keep going down. Maybe it just doesn't go down as quickly. In order to send this up in another direction, you need a very large change in monetary policy. And that, I think, just hasn't happened yet. And until there's a reason for it to happen, then I think it makes sense to assume that Bitcoin dominance will go higher. Now, the question is how much higher? And I wish I could tell you. If you look at, say, a fib retracement tool, and let's flip this over to a regular scale here. What it looks like is that, it'll go up to a level and then kind of spend some time there, right? So first went up to the 236, found support there. Then it went up to the 382, got rejected, and then checked back in with a trusty bull market support band, and then broke through. Then found support, briefly went below it, but mostly held support at the bull market support band, and then went up. And then it went to the 0.5 fib level, got rejected there between April and June of 2024, broke through in July, went up to the next fib at the 618, got rejected, back down near the 0.5. Now it looks like it's finding support at the same level it got rejected at back in November. And it's starting to move back up. The next level on this is 66%. Now, I can't promise you it's going to go there. But what I would say is that if ETH dominance goes another 1.5% lower, then I wouldn't be that surprised to see all Bitcoin pairs get much closer to those range lows. And if they get closer to the range lows, then how do you not get to 66%? Remember, Bitcoin dominance already wicked to 64% when all Bitcoin pairs went here. So if all Bitcoin pairs go down here, you're easily at 66% Bitcoin dominance unless ETH Bitcoin gets a massive bounce between that time. Okay? If ETH Bitcoin stays at 0.023 and all Bitcoin pairs go back down here, well, you're already back at 64% Bitcoin dominance. And you're likely heading higher at that point. To me, could you go higher than 66%, right? I mean, that becomes the question as well that you could start to ask yourself. But in order for all Bitcoin pairs to go to the range lows, I think you just need time, right? I think you need time. I do think it will happen. And I think given enough time, it should happen. Yes, because they slowed the pace of QT, it might take longer to get there, but it doesn't mean it's not going to happen. So those are generally my views. And remember, in order for Bitcoin dominance to really go up, retail has to return. If retail doesn't return, there's only one Bitcoin. That doesn't mean Bitcoin USD goes up forever, right? We get bear markets, we get bull markets. But you could argue that regardless of the direction that Bitcoin goes, the altcoin market will likely bleed against Bitcoin until there is a sufficient pivot in monetary policy. Last cycle, we had QT ending and QE beginning before all Bitcoin pairs bottomed, and we had rate cuts. Back then, we got 75 basis points of rate cuts, but remember, the terminal rate was only 150 basis points. This cycle, the terminal rate was 550 basis points. And so far, we've only got 100 basis points of rate cuts. If memory serves me correctly, actually, what was the terminal rate last cycle? Was it 150? Now I'm second guessing myself. Was it 150? Maybe it was actually, no, it was 250. It was 250. I'm off there. It wasn't 150, it was 250. Right? And so you had 75 basis points of rate cuts, right, down from 250 to 1.75%. That ratio is still greater than what we are at right now with 100 out of 550. Even though we've had more rate cuts in terms of more basis points of rate cuts, even though we've had more, as a percentage of the terminal rate, it's less than what we had last cycle when all Bitcoin pairs bottomed. And in order for it to be equivalent, you would need rate cuts to be 165 basis points down from the terminal rate. Meaning you need another 65 basis points of rate cuts from where we currently are in order for it to match where all Bitcoin pairs really bottomed out and started to really turn around last cycle. I mean, they bottomed out technically before this cut here, but it wasn't obvious, right? I mean, this could have just been on another lower high, but they didn't start to really move up again until after you got 75 basis points of rate cuts and QE. This time we're still in QT. We've only got 100 basis points of rate cuts, which is a lower percentage, relatively speaking, than this one. So I guess what I'm trying to say at the end of the day is that I do think Bitcoin dominance is likely going to go higher. It could go higher. And people always say, is it going to go higher in a Bitcoin rally or a Bitcoin dump? And my answer is always yes, right? It does it on both. That's the point. It doesn't matter what way Bitcoin goes. Alts bleed against Bitcoin no matter what until monetary policy sufficiently changes. That doesn't mean you're not going to have occasional rallies by some alt Bitcoin pairs. We've talked a little bit about Sol Bitcoin, right? And how it's followed ETH Bitcoin, just 2.5 years delayed. At some point, it'll likely have a rally back up to its bull market support band. Maybe that happens, right? I don't know. I mean, it's still out the 0.236. This is exactly where ETH Bitcoin got a bounce before it put in a lower high and went a lot lower. So I don't want to sit here and tell you that, you can't have occasional alt Bitcoin pair rallies, right? You absolutely can. The problem is that I'm not here to time these smaller rallies by alt Bitcoin pairs. I'm here to try to identify these larger trends. And I just don't yet see a change in this trend. Like, this trend still looks constructive, and monetary policy is still likely sufficiently restrictive to keep it this way. So those are my views about Bitcoin dominance. I hope you enjoyed the video. Remember to check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Make sure you subscribe, and I'll see you guys next time. Bye.